You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 9th day of November, 2022. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one is our live training room, which is reserved for members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, in a few minutes, Michael will show you exactly how to do that. Now, our second live broadcast begins at 12 noon Eastern, and there are 2 distinctly different ways to join the afternoon broadcast, one a little better than the other. The best way, you only have to do this once. Go to mytradingiq.com. Scroll down to where it says afternoon broadcast. Click the link. Fill out the 30-second registration form, and then every trading day going forward, you'll get an email before this broadcast starts, and all you have to do is click the link in the email, and it will automatically log you into our platform. Now, on the days you're out of the office, away from the desktop, maybe on vacation, whatever the case, but you still want to join the show live, you're in luck. All you need anywhere on planet Earth is an internet-connected device. A phone, a tablet, a PC, a Mac. Doesn't matter. Just point the browser to our YouTube channel, which is very easy to remember. youtube.com/CFRN. Not only do we broadcast live each and every day on our YouTube channel, but we also archive every daily broadcast. Currently, there's over 2,100 daily live broadcasts archived for your educational and viewing pleasure. If you're new to the world of CFRN, it's one of the best ways you can get to know us. Go to the YouTube channel and don't just listen to what we had to say today, because the person can say anything on any given day. However, you can scroll back 6 weeks, 6 months, a year, 2 years, even more. Find out what we were saying then. What I hope you'll find is that thread of continuity that is woven through each and every broadcast. Because everything that we do, everything that we teach, everything that we offer is built on the underlying principles upon which markets operate. If you're looking for parlor tricks, circus acts, get-rich-quick schemes, you're in the wrong place. That's what you've spent years and probably tens of thousands of dollars chasing, some holy grail that cannot exist. But if you actually want to learn how to trade, you are in the right place. So with that said, we're going to open with a word of prayer. Now, our topic last week and into this week has been about fear. It's one of the most powerful tools the enemy has. Our scripture today, Romans 5, verses 3 and 4. I'm reading from the Message translation. There's more to come. We continue to shout our praise, even when we're hemmed in with troubles, because we know how troubles can develop passionate patience in us, and how that patience in turn forges the tempered steel of virtue, keeping us alert for whatever God will do next. In alert expectancy such as this, we're never left feeling shortchanged. Quite the contrary. We can't round up enough containers to hold everything God generously pours into our lives through the Holy Spirit. Again, that's Romans 5, verses 3 and 4. If we breathe, we've struggled. The entire human race has this in common. Trials and hardships have occurred in our lives, and we've found ourselves doing anything in our power, including begging God to get us out of this difficult season. Understandably so, but there's so much more that God wants to do in and through us from these very trials that we face. Whether we're in between trials or in the midst of them, let's seek God like never before and trust that He will see us through. Pray with me. Heavenly Father, we don't know what the outcome of our difficult circumstances will be, but we do know that You will work all things for our good because we love You. Your grace is sufficient for us, and Your power is made perfect in our weakness. So we boast about this trial and our weakness so that Christ's power may rest on us. God, after our suffering, please restore us and make us strong, firm, and steadfast. We know that these sufferings will produce perseverance, character, and hope. For these light and momentary troubles are achieving for us an eternal glory that outweighs them all. So in our trials, God, help us to fix our eyes not on what is seen, the temporary things that burden us, but on what is unseen, that which is eternal. We praise You that You comfort us in our troubles so that we can comfort others with that same comfort. We'll delight in weakness, in hardships, in difficulties, for when we are weak, then we are strong. Lord, help us to remember that in everything we are more than conquerors through Christ, and because of this, we can approach Your throne of grace with confidence. It's in Jesus' name we believe and pray. And everybody said, Amen. Okay, let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 308 points, almost 1%. NASDAQ is down 127 points, that's 1.25%. S&P 500 is down 34 points, 1%. And the Russell 2000 down 16 points, just shy of 1%. We talked about yesterday. I'm not gonna talk politics here, but we said whatever color the wave was would reflect in the charts, and leave it at that. And the commodity basket. Crude oil down $2, trading 86.91 last. That's a drop of 2.25%. Gold up 60 cents, trading 17.1660 last. Silver down 11 cents, trading 21.39 last. In the Asian markets at the close, Nikkei down 155 points. Shanghai down 16. The Hang Seng down 198, which is over 1%. And in the European markets at the close, FTSE down 10, DAX down 22, the CAC down 11. And so that gives us a red day in Asia, a red day in the UK, and it's a big red Radio Wednesday here in the US of A. And I got a feeling I'm going to be saying that quite a lot in the near future. However, as futures traders, it doesn't matter to us if the market's moving up or down, because as a futures trader, you can be long, short, and long again all in the same hour if that's what the chart in front of you tells you to do. And futures do trade around the clock from Sunday night at 6 p.m. Eastern until Friday afternoon at 5 p.m. Eastern. So with that, let's go to Michael and get a recap of everything that happened in the live training room this morning. After that, I'll be back. We'll take a look at the Logic 247 alerts, the Concierge Trade alerts, and at any point during the broadcast, if you have a question, all you got to do is type it in the question box. We'll be very happy to answer it for you. Michael, if you're ready, take it away. And that's the sound of Michael not being quite ready yet. Okay, then we'll just pop up a daily chart. Take a look at what's really going on. We've been in a downtrend since way back here, March 29th. Okay, no secret there. A couple of times we attempted to break the downtrend, and each time we failed. Right now, price is trapped between resistance and support on the daily chart. Overhead, we have red and falling. We know that's resistance. We have the 38% reverse fib of the last leg down. We also have the 24% fib retracement right here of the entire move down. And also as support, we've got the daily BBC and the step line. Now, if price trades through the support levels I just mentioned, there's 1, 2, 3 important obstacles in the path of price continuing lower. We have to take out the low of yesterday, the day before, and then the low of November 7th, which is going to bring us into another strong support area, which would be this low. That would also be the 24% fib extension of the last leg down, and also the 24% fib retracement of the last leg down. So you might be asking why, since you're trained on a 7-tick range chart in the live training room, would we spend time looking at a daily chart? Because the institutional traders, the Goldman Sachs of the world, those who have the power to move the markets and are the ones who move the markets, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why is that? Because while our accounts are denominated in thousands and tens of thousands of dollars, their accounts are denominated in hundreds of millions and billions of dollars, meaning they can handle a much deeper drawdown than you or I, and they can stay with a profitable position far longer than you and I might be comfortable with. Michael, did I hear you in the background there?
Yes, I am back. Yep.
Okay. If you are ready, we're ready for you.
Okay, thanks. Sorry about the delay.
Oh, not a problem. It's a red day all over the world. Asia, Europe, and here at home.
Wow, and crypto is getting crushed today too.
Everything.
Yep. All right.
Okay, it's all yours.
Here we go. Good afternoon. Good afternoon, everyone. Today is Wednesday, the 9th day of November, 2022. If you have not taken a free trial with us and you want to, go here to the homepage at mytradingiq.com, and right here, click on that, and it will bring you to this page. No, it'll bring you to this page. All you have to do is fill out that little form and you'll be sent all the information. This page, I'm sorry, I went really fast. This page, all I have to do is fill out that little form and you'll be sent all the information that you need to get into the live training room in the morning. Now, if you do take the trial and you get into the live training room, you should definitely go here to platforms, download the charting platform. All right. If you're taking the trial, you should have the charting platform in front of you. So you're not just limited to 2 hours a day with the charts. You have it overnight if you want, whenever you want to look at the charts. Okay, you're not limited to 2 hours a day. You should look at the trade handout. These are the rules for the trade setups. What I do in the morning. Watch the videos of me doing it in the morning. Get yourself used to seeing it, right? So when you see it in the room, it's not overwhelming. All right. Now, today, a recap of the results. All right, so if you're going to read the spreadsheet, you got to read all CFTC risk disclosures down at the bottom. Today's the 9th day of November, 2022. Made 2 ticks in crude, 24 ticks in gold, and 60 ticks on the ES. That put us at $1,010 per contract on the morning session. Today it took 14 minutes and 4 trades to get to the goal for the day, and that put us at $100 a contract. We took a total of 22 trades today, right? So on the month now, we're at $8,600 a contract. That's over 7 trading days, averaging $1,228 per contract per 2-hour trading day. The year now, I've got my goal for the day every day. It's 213 out of 213 days. And we've now gone 274 consecutive business days since my last negative day. Down in the spreadsheet now, we've gone, the year we're at $216,428. That's 1 contract, 2 hours per day, averaging $1,016 per contract per 2-hour business day. What did we end up with today? 1,010, so we're pretty close to the average. If you were to quit trading when you got your goal for the day and you were to add 1 contract per month, you now would have had to work a total of 34 whole hours this year, and you would have averaged $4,759 per hour on that. So far this month, we haven't even worked the full hour yet. Given the 7 trading days so far this month. If you were to quit trading when you get your goal for the day, still wouldn't have worked a full hour, and you would be at $9,350 per contract right now. And that less than 1 hour of work. Just something to keep consider. That's really where you want to be. All right. All right, so let's get into the actual trades. I'll start out with crude oil today because we hardly had anything on crude. Okay. Not that there wasn't a lot. It's just that we didn't do much with it. All right. We had a break-even trade right here. It went up and it came all the way back down before I got out of it. We had a break-even trade here. We had a trade I missed there. And then I was worried about this being in chop right here, but it got out of it. This was during the moment in time. I had a +2 there. Yep, +2 right there. This was all during the moment in time. I thought it was going to go down and then go up. It looks like it went up before it went down. Okay, so it hit all these numbers before it hit that number. I thought it was going to go down to that number first and then go up to those numbers. Either way, it did what we thought it was going to do to some degree. This was a blue off a blue right in here. And that was it. We didn't have any more blue off of blues or red off of reds anywhere. Okay, that was crude. Now gold. Let's see, on gold, we started out here, our first trade on gold, when we picked up 3 ticks right there. All right, then we stopped out, we're at -7 right there. Then we had a missed trade, a break even. This ended up being a huge break even trade. It went all the way up there and came back down and got me out of break even over here. I really should have gotten something out of that, but I didn't. The next trade was right here. We picked up, we're at -7. I think we picked up 30 ticks on that to get me to 23. Okay, plus 23. And then, yeah, that's what it did. And then right in here, this was the moment in time. I thought it was going to go down to this level, but I wasn't really sure what it was going to do. We needed it, I think. What was I thinking? I don't know. Well, it was the wrong color. We had the right kind of separation, but with the wrong color. And I thought it was going to go down to here and then bounce up and then go down to here and then go down to here. And it went up first, then it went down, bounced and consolidated a little bit. Then it went right through all of this stuff, all the way down to here. We did trade some more in the gold. After that, we went from plus 23 to plus 29. So we had a plus 6, then a plus 5 to get us to 34. And then I stopped out. Put us back down to 24, and it hasn't done a thing since then. It's just about setting up a red off a red right now, but it hasn't completely finished it. Okay. And the ES was our moneymaker today. And we had the most trades on the ES as well. In here, let's scroll all the way back here. All right, our first trade on the ES was right in here. And see when these yellows, they say it's going back to the BBC. Those things are pretty good. Pretty good when you get them. Anyway, the first trade was right here. We ended up with a break even on that first trade. The second trade, we picked up 4. Then we picked up 2 to get us to 6, and then 2 more to get us to 8. This is where we got our goal for the day. It took 4 trades right here to get our goal for the day. Then we went from 8 up to 20. We picked up 12 ticks right here. Now this one in the room this morning, I was able to walk through everything step by step, talking about the rules as they happened. I was basically reading the rules off, and they all just happened as I was doing it. We picked up 12 there to get us to 20, and then we had a break even there. We stopped out there. That put us back down to 10. Then we stopped out again. Now, I always say if you stop out twice in the same market in the same direction in a row, you're probably doing something wrong. In this case, I didn't do anything wrong. I did everything right. It was just whippy in here. And this one stopped me out to the tick, and this one was just a little more than to the tick. It was just whippy, meaning the stop at 10 ticks was just a little too small. So if you get into a situation like this, you best to just wait until you have a good trend established before you start trading again. So we waited, and we had a good trend established right here. All right. So our next trade in here, we picked up, we're at 0 after the second stop out. And then we picked up 12 ticks, I think it looks like. Yeah, we picked up 12 ticks there, then 8 ticks to get us to 20. Then this was the moment in time. During the moment in time, I didn't really know what it was going to do, but I thought it was going to go up to here. I thought it was going to go down and then go up to here. And it was this bar that was working at the time. It ended up closing up, not down, and it went straight up to there. And then it came down and messed around a little bit. Gave a red off a red right here. That was all during the moment in time. Now, the moment in time was like a full half hour this morning. So anything else that happened in here, we didn't do anything with. There was another red off a red right there. We didn't start trading again until over here. Now at that point, I believe at that point we were at plus 20. Okay, so we had picked up another 12 ticks there, got us to 32. Another 8 got us to 40. Then a break even, and then 20 right there got us to 60. All right. And at that point, I had drawn in this. I was using that as the leg length based upon this move right here. And I was anticipating this move was going to get up to there. And it took it a while. It eventually got up there, but it didn't give us any trade setups on the way up there. Not a single trade setup. All right. Then we get into the break. And during the break, it looks like no red off of reds or blue off of blues. This was pretty close to a red off of red, but I don't think it actually was. And that was it for the morning. All right. So there were some trades that were in there that were really easy to do this morning that were able for everybody to follow through with me on. But there were some that weren't as easy. It wasn't a terribly hard day to trade. It started out kind of messy. Stopping out on the ES twice in a row. in the same direction like that. It was kind of messy, but it came around, it came together, things started acting normal again. So if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 9th day of November, 2022. We made 2 ticks in crude, 24 ticks in gold, and 60 ticks on the ES. That put us at $1,010 a contract on the morning session. Today it took 14 minutes and 4 trades to get to the goal for the day. At that point, it was up $100 a contract, and it took a total of 22 trades. So on the month now, we're up $8,600 a contract. That is over 7 trading days, averaging $1,228 per contract per 2-hour trading day. On the year, we've gotten our goal on 213 out of 213 possible days every day so far this year, and we've gone 274 days now since our last negative day in the room. And that puts us at $216,428 on the year, averaging $1,016 per contract per 2-hour business day. Okay. All right. So if you were to quit trading when you got your goal for the day, and you were to add 1 contract per month, so far this year, you would have only had to work 34 hours in total, and you would have averaged $4,759 per hour on the year. Okay, $4,759 per hour. Now, if you've not taken a free trial and you want to, go here to mytradingiq.com. Right here it says grab a seat, 5 days of training and trading. Click on that, and you'll be brought to this page. Fill out this little form, and then you will be sent all the information that you need to get into the room in the morning. Okay? All right. Again, if you're going to take the trial, download the platform, look at the trade handout, and watch the videos. Right? Be prepared for the trial. That's what you should do. Okay? That's it, guys. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am ready. Let me grab the screens.
Okay.
Recap of the recap.
Today, it took 14 minutes and 4 trades to get to $100 per contract.
Good job.
Thank you.
Was it a tough day of trading or a simple day? Never an easy
day. Trading is not easy, but it can't be simple.
That's right. I heard that somewhere.
It started out, we got the goal for the day in a reasonable amount of time, but we gave it right back. So it got a little messy. It seemed like once people started getting into the markets, but then it got kind of normal after that, and it started to show everything and act normal and do things that it normally does. So there's a little fallout, I think, from the elections and stuff like that, but not too much.
All righty then. Well, good job.
Thank you.
Again. Okay, guys, we're going to dive right into the Logic 247 recap. Now, whether you're a member or just on a trial, not only do you have access to the live training room each and every trading day, but that's a 2-hour window out of this 24-hour CFRN day. See, when the live training room closes in the morning, we don't just shut everything down and wait for the Wall Street open the following morning. The Logic 247 alerts come out around the clock because we have traders around the world and because futures trade around the clock. There's a 1-hour break every day from 5 p.m. to 6 p.m. So right now, we know it's the Wednesday session, but that's going to end at 5 p.m. Eastern. Tonight at 6 p.m. Eastern, when the markets reopen, that will be the beginning of the Thursday session, even though it's still Wednesday night here in the U.S. We have now issued over 12,300, I believe, individual hand-curated Logic 247 alerts over the last 223 weeks. As of 12 noon today, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 61 alerts. That's where you're given an entry, an initial target, secondary targets, and a final trade to target, well before the alert triggers. Because the purpose of the alert is not so that you can just trade them and not have to, bother learning how to trade. The alerts are a training aid to help you learn to spot windows of opportunity in whatever market you choose to trade. Now, we cover the ES, the Dow, the Russell, the NQ, crude, gold, silver, the euro, bonds, and I think that's it for now. So since the market opened Sunday night, we issued 61 alerts, 8 never triggered. Still awaiting the outcome of 9. I just put a bunch out here a few minutes ago, or an hour ago. So we've had 44 actionable alerts this week, of which 7 or 16% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our passport holders during their unlimited one-on-one private mentoring sessions. Over the last 223 weeks, we've averaged 20% or less of the alerts being stopped out based on that risk profile I just explained. The hallmark of a good week would be that this number be below 20%, and that this number would be 1/3 or less than this number. So if we take 4 and multiply it times 3, that's 12. That's well below 33. So that's how you break down this recap. Now, members and those on the trial, to become a passport holder, you have access to every alert that's ever been issued, going all the way back to day 1, alert 1. In fact, we ran a beta test before we launched, and you have access to that as well. Okay, if you don't know how to access the alert channel or anything that you hear me talk about, call Valerie at 949-42-Emini or send an email to support@cfrn.net. It's that simple. Okay. Now, we also have our original alert service, the concierge trade alerts. They are different in a couple of different ways. The logic alerts are based on current price action, while the CTAs are based on historic price action. The CTAs are published in the CTA channel and in the trial channel every evening shortly after the Globex open. So last night Globex opened at 6 p.m. Eastern. The alerts were posted at 6:10. Now, chances are you don't trade all of these markets, okay? Maybe you got 1 or 2, or maybe you're just focusing on one as you learn. That's okay. Okay? Don't worry about the other stuff. Focus on what matters to you. But we're going to use the ES as an example. Last night at 6:10 p.m. Eastern, if what you trade is the ES, you should go to that 30-minute chart and make note of where price is at that point in time. You should then draw a line in the sand at 38.40, a line in the sand at 38.20, because from wherever price was at the time this was posted, if price starts trending up towards 38.40, that's bullish. So our strategy will look for opportunities to be long the market. If price starts trending down towards 38.20, that's bearish. And so our strategy will look for opportunities to be short the market. In either case, that's where you're going to use Logic 247 and everything you learn in the live training room every trading day to yourself find opportunities to be long or short the market. Now, as you draw these lines in the sand, which you'll see when we go to my charts here in just a moment, initially this is a target. Initially, this is a target. Once penetrated, it becomes an entry. Once an alert triggers, there is a greater probability of it triggering multiple times than not triggering multiple times. So yes, once these numbers are issued, they are valid until the following evening when the new set of numbers come out. The weekly trading zones are a different issue. Those are issued on Monday morning at 6:15 a.m. Eastern for all of our members and those on the trial. We've published the weekly zones since December 14th of 2009. Once you understand how to properly use the zones and factor them in to the trades you take and don't take, you'll find that they become one of the most important tools you have in your trading toolbox. So if you want to grab a screenshot, go ahead, because we're going to walk through each one of these markets. We've already covered the daily chart, but we'll peek back at it one more time, just in case there's somebody that got here late. Okay. Big red candle. Not a surprise. We talked about it yesterday and why. I'll leave it at that. We're trapped right now between resistance at red and falling and these two lines right here, and support at the daily BBC, the daily step line. The green line is the BBC. That stands for bull bear cross. When price crosses above it, we're bullish. When price crosses below it, we're bearish. In other words, here we anticipate higher prices, and here we anticipate lower prices. Now, it's important to understand that price flows the same across every market and every time frame, from a 1-minute chart to a monthly chart. And I'm not talking about just these markets, okay? I'm also talking about individual stocks, Google, Apple, whatever you like to trade. I'm also talking about crypto. I'm also talking about Forex. Everything we teach you, the indicators you own for life when you become a passport holder, they are fluid across all markets, all time frames, because they are built on the underlying principles of how markets work. I don't care what market, what stock, what crypto, or what Forex pair. Price flows from support to resistance, back to support, back to resistance. It's a never-ending cycle. It's been in existence since the inception of the markets, and it will remain in existence until the markets cease to exist. Now, it's going to take you a minute to wrap your brain around that whole concept and idea, because everywhere else you've gone, you've been taught there's a secret, there's an algorithm, there's a magical indicator or mystical oscillator, or some mumbo-jumbo formula of numbers that are going to just change your life. Well, guess what? People lie. It's right there in the Big 10. Don't kill, don't lie, don't steal, right? So, sorry that you've been lied to. Sorry that you've wasted money on parlor tricks and circus acts and so forth. But you know what? You're not alone. We all did. We all did. And then we finally decided, you know what? Instead of relying on these stage props, why don't we just go see how the market really works, and then build a strategy and a set of indicators that will embrace how the markets work? Because the market is always right. So our strategy and indicators are not built to outsmart the market or outrun the market or beat the market. The market is our business partner. We don't want to beat it. We just want to do whatever the market's doing at any given moment in time, because again, the market is always right. Now, going back to the logic alerts, where over 223 weeks we've issued over 12,000, I think 300 individual alerts. We know that on average, 20% will get stopped out because order flow switches in the middle of a trade. You get into a long trade, obviously, because there's more buying pressure than selling pressure. You get into a short trade because there's more selling pressure than buying pressure. But we know that in the midst of a trade, that order flow can shift from buyers to sellers or sellers to buyers. And there's no way you can foreknow that, foretell that. No indicator, oscillator, or algorithm can provide you with that knowledge. Why? Why is it not just available, but why is it not possible? Because of all the participants there are in the market who are making buying and selling decisions based upon their strategy, their time frame, their computer generated trades. Okay? So if you're still Googling till your fingers bleed, looking for that magic, that holy grail, just hear me. Not only does it not exist, it cannot exist. A professional trader, a consistently profitable professional trader, doesn't even bat an eye when they get stopped out. Why? Because they know that getting stopped out is as much a part of trading as breathing is a part of life. It's not easy, but as we said before, trading's not easy, never will be easy, but it can be simple. But you're going to have to leave your baggage at the door. All the stuff over the years that cost you probably princely sums of money. It didn't work for you then. It's not going to work for you now. Okay? You got to put that on the back burner and give us the space and the time to teach you how to trade. And with that, we'll go to the 30-minute chart of the ES. Okay? Now, this vertical line separates today, Wednesday, from Tuesday, from Monday. Okay? On Tuesday, where the market finds support at the weekly zone, at the weekly zone, at the weekly zone, where to find resistance at the zone. That's kind of how it works. Go back to Monday, where we find support. Yep. Resistance. Yep. It's a never-ending cycle. Once price finds resistance, it's going to turn around and go look for support. And when it finds support, it's going to go look for resistance. And when it finds resistance, it's going to go look for support. So the indicators, they serve as dynamic support and resistance while you're trading. The weekly zones, once they're published Monday morning at 6:15 a.m. Eastern, they don't change all week. They're carved in stone. That's your fixed support and resistance. Okay? So the CTAs came out last night. Okay, this was the opening candle. And so from the opening candle, which opened at 38.32, but it was 10 minutes into that candle that the CTAs were published. Okay, but it still gave you time to get your goal for the day before you hit the target, which became an entry and traded up to 38.44. That's 4 points, $50 a point, $200 per contract traded. Price then pulled back to the BVC. The pullback holds more often than it doesn't. Off we go again. This time we put in a high at 48 3/4. So that's 4 3/4 points at $50 a point per contract traded. And then we dip back below again, support. Okay, this little nubbin right here, I mean, I'd be able to get at it. Okay, what's the high of that candle? It gave up about a point. But then we take another run, and this one gives up 2 3/4 points. And then we pull back, and then we make another run. And this time we make it up to 38.45. That's 5 points at $50 a point. Back below the trigger, up we go again. This time, 3 points at $50 a point per contract traded. Now price gets below the BBC, and it makes a move down. As it takes out these lows, you got plenty of room to get your goal for the day before you hit the target. And once you hit the target and pierce it, it becomes an entry. And from 38.20, we drop to 38.12. That's 8 points. $50 a point, $400 per contract traded. Once the market finds support, it's going to go look for resistance. The pull back to the BBC holds more often than not. Again and again and again. And then we come back down through. This time we drop to 38.12.75. So that's over 7 points. And we get back above the trigger. We drop again. This time we go all the way to the target. On every long alert, the final trade to target is the weekly zone above, and on every short alert, the weekly zone below. Okay. So from 38.20 to 38.11, that's 9 points, $50 a point, $450 per contract traded. And then we reach up to the BBC, find resistance, and the market hands you another $450 per contract traded. Now we've traded below the weekly zone. You see this pullback to the BBC held, but it didn't take us back above the trigger. And we wouldn't have traded that anyway because now the BBC is below the short CTA. We're only looking for longs above the BBC, shorts below the BBC. Okay. We've traded as low this session as 37.88 1/4. Let's call it 37.90. That's 30 points. As you spend time with us, you'll learn how to stay in trades like this, okay? And how to re-enter a trade when it's appropriate. Multiple time frames is the key. We start out looking at the daily chart to see which way the institutional wind is blowing. And as I just showed you, the institutional money's trapped right now between support and resistance. So then we drop down to the 30-minute chart to see which way the wind's blowing there. And then you'll use a smaller time frame, like the 7-tick range you see in the live training room. Some of our members use a 5-minute chart. Some of us use an 8-tick range. There's no magic time frame. It just needs to be smaller than the 30-minute. That's where you're going to actually execute the trade. And 2 points. Now, you just heard me go through each one of these moves and how many points was available. But I don't want you to lose sight of this if you're new. 2 points a day in the S&P is $100. 10 ticks in crude, $100. 10 ticks in gold, $100. 20 points in the Dow, $100. Okay, whichever one of those markets you might trade. 2 points in the S&P, I'm going to go back to that, $100 per contract traded. Our 24/20 blueprint, it's not going to let you trade live right away. You need to prove to yourself that you understand the methodology and the strategy before you go blowing up another account. So you need to put together 10 consecutive days in a row in SIM where you reach your goal in 10 trades or less before the 24/20 blueprint will give you the green light to trade real money. Once you go live with your first contract, your goal now is to increase your account balance by $2,000. Once you've accomplished that, the blueprint will give you the green light to add a second contract. Now, the big difference between your first contract and your second contract live, okay, the first contract is funded with your startup capital, but the second contract is funded with profit you earned in the market. The 24/20 blueprint will notify you when it's time to add number 3, number 4, number 5, number 10, number 20. But you only add one at a time when it's time. and you only add with profit you earned in the market. If you have the patience and self-discipline to stick to those rules as they're laid out in the blueprint, it will make it far more difficult for you to blow up another account. Unless you just get frustrated and say the heck with it and just break every rule in the book. Okay? So I'm not saying you can't blow up an account. But again, you're going to have to go against the grain in order to do so. Okay? All right. That's the S&P. Here's the Dow. The Dow gave you plenty of opportunity to get your goal for the day before it hit the target. And then if you entered at 33,220, 33,200, the high of that candle was only 12 points, not $100. Okay? So we pull back, make another run, and we get to 225. So that's $125 per contract traded. Then we pull back and we do it again. And then we pull back and we do it again. Okay. Keeping in mind that each time we pull back, if we're above the BBC, that's a target. Okay. So this move, this move, this move, this move, all gave you an opportunity to get your goal for the day. Okay. Before you got to the CTA. And the same on the downside. Okay. That's how it works every day, day after day. On the short side, we put in a low, 978. And then we got back above and see how we held at resistance. When you pull up to the BBC, expect resistance. When you drop to the BBC, expect support. So the pullback held, and it held, and it held, and it held. Then finally we come and we trigger again, and we get down to 963. Then we get back above the trigger, and we drop to 861. And then we get back above the trigger, and then we drop to 820. From 990 to 820. That's 170 points, $5 a point. Now we pull, we just get above, right there. Okay? And then where do we drop to? Call it 32,800. That's 190 points. At $5 a point, it's almost $1,000 per contract traded. On the Russell, no trigger on the long side. Price opened here, ran up to the zone. When we approach a zone from below, we expect resistance. When we drop to a zone, we expect support. Support, support. Resistance, 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 resistance to the tick. Get the idea? It's pretty simple. So, 1803, lots of room to get your goal. But then once it triggered, it took us down to 1801.70. Then we got back above the trigger and we dropped down to 1800. That's $150 per contract traded. And then we pull back up and we drop and we make it all the way to the target, which is 1797. The zone is 96/97. 97 to 1803. 6 points, $50 a point, $300 per contract traded. But then, just like the Dow, we reached up one more time. And we dropped all the way to 1783. It's 20 points, $50 a point, $1,000 per contract traded. Just doing what you're taught. NQ. On the NQ, the CTA number was 11,117. Okay. This first little move up, goal for the day, but then we breach and go up to 130. That's $260 per contract traded. The NQ pays $20 a point. And then we pull back to the BBC and find support, and off we go all the way to the target. Hey Alexa, what's 53 minus 17?
53 minus 17 is 36.
Alexa, what's 36 times 20?
36 times 20 is $720.
$720 per contract move. If you stick around long enough to earn the right to trade 10 contracts, that's $7 grand. Okay? But that's not going to happen overnight. You're going to have to actually work. This is a job. It's more than a job, it's a business. So we're not only teaching you how to trade, but we also teach you how to manage your trading business. In that 2420 blueprint, you'll have instructions on how to write your business plan and how to write your trading plan. Two distinctly different documents, and 9 out of 10 traders don't have either one. Is it any wonder that 9 out of 10 new traders fail? They also don't have a teacher. They might belong to a room, or maybe, books or videos, YouTube videos. We have nothing against books and videos. No, not at all. But they're no substitute for a living, breathing teacher, taking off trades live in real time while you follow along in sim and ask lots of questions so that you begin to understand how simple the strategy really is. And so we trigger here and run up to 1139, and then we get back below the trigger, and then we run up all the way to that $700 target again. And then we get below the BBC, and we come down and we trigger on the short side. And from 55, we drop to 20. $600 per contract traded. Pull back to resistance at the BBC. There's a little drop right there. 88. $45. Okay, 10. $200. Then we get back above the trigger. Notice the pull back to the BBC holds. And down we go all the way to the target. 995. 10,995. So that would be 60 points at $20 a point, $1,200 per contract traded. And even though this pullback held, we're not trading CTA anymore because the BBC has dropped below that. And remember, we only want to sell when price is below the BBC and buy when we're above. That right there will solve so many issues you've experienced as a trader. Now, why did price stop here this morning? Well, there's your answer. And why did price stop there yesterday? There's your answer. When a bullish cross leads to an extended move, the first time price revisits that area, it's most likely going to be support. And it was. Same is true of a bearish cross in the opposite direction. Remember, price flows from support to resistance, back to support, back to resistance, over and over, again and again. So what's the high probability move from here? Well, obviously we've got to take out this swing low. And then we've got potential support right there, potential support right there, and then all the way to the zone at $20 a point. On crude oil, crude inventories came out today. So we come down to the target and down to the target, but the pullback here holds and it holds and it holds. From 88.30, made it down to 88.15. That's $160 per contract traded. And then we drop again. That's $110 per contract traded. Back above the trigger, drop again. This time $230 per contract traded. Back above the trigger. Down we go again. This time to 87.11. Now from 88.30 to 87.30. That's $1,000 per contract traded. We kept dropping, but I just want to point out from 88.30 to 87.30. That's a $1,000 per contract move. And then the market, in its infinite kindness, pulls back to the BBC one more time and gives you one last go at that trigger. And from 88.30, we've now made it down to almost 86.30. The low was 86.31. We missed it by a penny. $2,000 per contract traded. No secrets, no magic, no incantations, no candles. No candles that you light. We do use these candles. Everything we do is based on logic, based upon how markets work, how price flows. Why doesn't everybody just tell you that? Well, because then they couldn't sell you this endless array of indicators and oscillators and algorithms and all that stuff. You see, once you become a lifetime member, a passport holder, you're done spending money because we provide you with everything a trader needs, all under one roof at one low price. Undoubtedly, someone in the audience today has already lost more than what it costs to buy the passport. Now, buying the passport's no magic panacea. You're still going to have to work. You're still going to have to learn the methodology. You're still going to have to learn the strategy. You're going to have to learn how to trade. You don't want to spend the rest of your life depending on some guy or some lady in some room somewhere telling you when to get in and when to get out. No, you want that information to come straight from the market, straight from your chart. And that only becomes possible once you fully grasp how price flows. And 20% of the time, you're still going to get stopped out. Okay? All right. So, let's go to gold. Gold kind of had a huge move yesterday. But look where it found resistance. At the zone that was published Monday morning at 6:15 a.m. Eastern. Then we found resistance there again. And then we had one little candle spike up. And it traded all the way up to 25.80. So that's $280 per contract traded. And then we pull back to the BBC, and so far the pullback is held. So any time in any market that you have a wide-ranging day like this, for the following day to be sort of a quiet day of consolidation, not unusual at all. Okay? Silver. Sort of the same story. Huge move in silver yesterday. When silver moves $1 from, say, 2060, to 2160, that's $5 grand. Nice day for silver. Okay. So last night, price found support at the zone. Right? And it made a run up to the target at 54. Then it pulled back to the zone and the BBC. That's support times 2. Ran up to the target. 2 pennies is $100, by the way. Just 2 pennies. And so from 21.54, we put in a high at 21.64. 10 pennies, $500 per contract traded. And then we get below the BVC and we run down to the target. Okay. Then we get back above the BVC and we run up to 21.57. That's $150 per contract traded. Then we get back below the trigger and up we go again to 21.69. $750 per contract traded. Why did price stop there? Look left. When we teach our children to cross the street, we tell them to look both ways. But as a trader, you only need to look left. Looking right, that's what you're trading into. Looking left will answer many of your questions. Okay, we got one market left here, the euro. And kind of a big move up yesterday for the euro from the low to the high. So some quiet consolidation. We finally trigger from 660 down to 605. It's not quite $100 on either one of those. But then we trigger again. And this brings us down to 500. That's almost $200 per contract traded. Then we get back above the trigger. Down we go again. This time to 375. Nice money. Back above the trigger. Down we go again. This time to 390. Okay. But not all triggers are created equal. Price does get above the trigger here. Finds resistance at the zone and the BVC. But now blue and climbing. It's actually blue and sideways, but typically blue and sideways leads to blue and climbing. Okay. Red and sideways typically leads to red and falling. So what we don't want to do is we don't want to short into what we fully expect to be support. And it was support, support, support. So you're going to have to let price get down below this low put in yesterday, and then you got all this area down here. And why would I anticipate that the market's going to move down as opposed to move up? Well, we're below the BVC, rule number one. However, we do have blue and climbing in the picture. So just like on that daily chart where I showed you price was trapped between support and resistance, resistance at the green line, support at the blue line. One of them has to give. The greater probability at this point is that the give will be on the south side. But right here you had a bullish cross. First time price gets to that area, it will most likely be support. And then you've got potential support there, potential support right there, but lots of room down here if the euro chooses to wake up. But at this point in the day, I wouldn't count on it. Now, that's also the beauty of the methodology and strategy that we teach you, is if the market you like, let's say you love to trade the euro, but the euro just doesn't have any trades. Go trade the ES. Trade crude, trade gold, trade the Dow. Go where the setup is. Why would you fish in a pond that has no fish? You wouldn't, right? But yet people try to make trades happen where there's no windows of opportunity. So you need to learn how to find the windows of opportunity. And like I say, in the beginning, if you want to stick to one market, I just trade the ES, okay. But that does mean that sometimes you'll have to be patient and wait for there to be a real window of opportunity, okay? But as you become more comfortable with trading and you become consistently profitable with the ES, trust me, you're going to start looking at the Dow and the Russell and the NQ and crude and gold, because if there's a beautiful setup on crude or gold or the NQ, but there's nothing on the euro, why would you not just go over to where the opportunity is, where the fish are, right? And put your hook in the water there. All right. I don't want to beat that to death. So we'll go back to the daily chart. Okay, we're really pushing down on support. If we close the session today below this green line, below this black line, and below this dotted line, we have potential support at this low, but it's probably a heads up that we're headed back to at least here. And if we break that to here, and if we break that to here, and if we break that to here, which is the low of this downtrend that's been going on since March 29th. If you want to become a member, a lifetime member with no recurring fees, no upsells, no new shiny objects to buy every other week. If you really want to learn how to trade, go here, eminifuturestrading.com. It's a pretty simple web page, couple mouse clicks, you're a passport holder. Once that happens, Valerie swings into action and provides you with all the information that you need to get your platform set up, your indicators going, the different channels that you have access to, like the Logic 247 channel, Concierge Trade Alert channel, Weekly Workshop channel. We've got a lot of channels, some public, some private. Okay. Now, in our discussion forums, we have what we call rules of the road. That means everybody is treated with dignity and respect. If you break that rule, you will be banned from the discussion group for a period of time to be determined by our staff. Okay? Along with 2 hours in the room every day, you have access to unlimited one-on-one private mentoring. And as I mentioned, the strategy we teach and the indicators you own for life work just as well on stocks and crypto and forex as they do on futures. You don't have to change or tweak a single thing because price flows across all markets and all time frames exactly the same. Let's wrap it up with our good word for the day. Now, we've talked for 2 days about problem solving. Today we're going to talk about walking by faith. 2 Corinthians 5:7. For we walk by faith, not by sight. Jesus said this in John 16:33. I have told you this so that you might have peace in your hearts because of me. While you are in the world, you will have to suffer. But cheer up, I have defeated the world. Life keeps handing us problems that test our faith. How do you know how much weight a bridge can handle? By testing it. Daniel's success made him a target. Knowing he prayed regularly, his enemies persuaded King Darius that all prayers should be made to him as the king. Yet Daniel kept praying each day in front of an open window, no less. When the king heard about it, he threw Daniel into the lion's den. But God turned the tables. The next morning when Daniel came out, his enemies were thrown in. Then the king announced, Daniel's God is the living God. You can read about that in Daniel 6:26. Shadrach, Meshach, and Abednego refused to worship the king's idols. Even when they were warned to bow or burn, they said, God is able to deliver us But if not, we still won't serve your gods. Daniel 3:17. And because they walked by faith, God delivered and promoted them. Facing Goliath, David refused to wear the king's armor. He said in 1 Samuel 17, I cannot go with these, for I have not proved them. So what did he go with? According to 1 Samuel 17:45, he went with the name of the Lord. And the rest is history. The chances are you'll never find yourself in a lion's den, a fiery furnace, or facing a giant. Though some days it will feel like it. But when you're under attack, number 1, pray and claim God's power. Number 2, walk by faith. And number 3, go in the name of the Lord. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.